Hello, guys. If you're joining us, this is a non-farm payroll special with the usual crew. Anything to try and pass the time.
We're in and we're at it.
We are right at it.
Let's see, get some levels up here. Should we go through what's expected?
Yeah, reel off some numbers for us, if you will.
Reel off some numbers. Okay, FX Rate reckon. These are their numbers. Minus 100k non-farm payrolls for March. That's a headline figure. That's down from 273,000 the month before. I think that's highly underestimating what we could potentially get. Average hourly earnings are the same 3%. Then we go down to the unemployment rate, where they're expecting it to build to 3.8% from 3.5%. But obviously, as we're discussing this morning, these figures could be miles out. We had initial jobless claims yesterday. They were expected to come in at 3.5, and they came in at 3.4 million, and they came in at 6.4 million. So anything could happen today.
So there was a bit of chat about the fact that the numbers aren't going to start filtering through. This is still sort of on the edge of where it kicked off, from what I read somewhere. I put it in the notes actually for this today. So payroll is expected to lose 100,000 in March.
The previous month, isn't it?
Yeah. So
I mean, it's
the American data has begun to reflect the impact of the coronavirus on the US economy. Initial jobless claims are obviously picking that up first. Over 10 million over the last fortnight have been lost. The non-farm payrolls for March will show some of the damage, though less than the claim numbers, as many of the layoffs did not begin until the later part of the month, which is why you're seeing these consensus estimates come in as low as they are.
Or as high as they are.
High as they are. Yeah. Okay. Share my screen. What can you see on that screen? Can you see?
Yeah, see the dollar gold down.
Got your line squawk in the middle.
You can see that as well. Yeah. All right. Lovely.
Enable it.
Enable it.
Yeah, you got to click the middle thing.
Where?
To get the feed.
Oh, right. Okay.
Telling
you. The noise.
Yeah.
That won't shut up now, will it?
Possibly, yeah. It'll be in your ear, though, yeah.
Right, I'll bring that up closer to the time. So you've got 3 minutes until we're live. So we've pulled up 4 charts here. Does anyone want to explain why we've chosen these 4 charts?
You can.
I asked Ian to choose them.
Well, the dollar index is obviously behind most of the majors. Normally, when we've seen this turmoil, should we say, in the financial markets, then a lot of investors have been running to the dollar as safe haven. And as Steve has mentioned in previous morning reports, etc., they haven't been running to gold because the volatility is so high. Traders have a tendency to buy the dollar as opposed to buying gold. But I think today it's really important because it's a US-based figure, and I think that this safe haven status that the dollar has been having for quite some time might deplete here. And that's why we're also looking at dollar yen as opposed to normally you might look at Aussie yen, because obviously Aussie moves lower with stocks quite aggressively as well. So today we're looking at dollar index and we're looking at dollar yen, obviously getting away from the safe haven dollar aspect, but staying with the safe haven dollar yen aspect. So I personally think if we get a catastrophic figure, then dollar yen is going to be the one to play, and the dollar index. So both of those moving to the downside. Okay. Gold obviously potentially higher with the dollar index lower, and the Dow, if it's shit, it's going to dip.
Yeah, so I've got 5-minute charts on all of these just so we can gauge the reaction.
I thought it was moving.
Yeah, hopefully. I'm going to have to ticks if you want.
Know.
You know, if it's a big number, then we could see these charts fall off the page quite literally on a 5-minute time frame, which would be fun to watch. So just to refresh for those that have joined us since, we've got 13 watching us. So numbers that we're expecting. Ian, what were they again?
3.8 from a build of 3.5 and minus 100,000 from a build of 273, I think it was.
Okay.
So 273, 283.
So we've got a minute to go. We get our news feed from Live Squawk. They're always very good with these sort of things. They're bang on it. You can get an audio output as
So you
well
need
as
to
the
turn that
text
volume up a bit,
coming
don't you?
through.
Because I haven't got the
I
volume
don't think
on
the
anything.
volume will come through, but
I can get
you'll
it
see
coming
it flash up
through.
on the screen. Can you?
Minus 701,000.
It's just come in.
Yeah.
Well, it hasn't
Shocking.
updated on here.
Yeah, no, that update, the feed updates a little bit later, but it's coming through.
Okay, so initial reaction.
So I think the
dollar
charts have
down
frozen.
quite possibly gold rocketing up.
Yeah, so we're getting what we expected. We're getting a move down in the dollar index. You're getting a spike in the Dow, though. I mean, it's not holding its lows immediately, but dollar yen's having a good go now.
The dollar index coming off.
Yeah. Which is basically what we
there's the
would have
number there.
expected.
Changing non-farm payrolls down 107,000.
No, 701.
No, 701.
701. Sorry, expected minus 100,000.
That's your dyslexia kicking in, Joe.
4.4. That's more like it. I mean, they're miles out. Ridiculous. I know what you were saying earlier about it's only didn't take that much time scale into consideration, but they've been affected for 2-3 weeks, haven't they?
You have to sack these guys that are coming up with these estimates.
Fucking shocking. Yeah, we could have done better than that, surely.
And we don't even know what we're estimating.
No.
Exactly.
Well, the markets, again, the markets have sort of had a reaction. The Dow's had a reaction lower, spike back up. It's
first move is the wrong move, as they often say.
It can be sometimes. Non-farm has always been one of those horrible days to trade, and I've definitely lost more money than made money on non-farm.
And it's those candles that are the reason why, aren't they? The big spike down, and then the sharp reversal back the other way. Dollar index getting bought up, so people fancying the dollar as the safest haven around at the minute, and selling off pretty much everything else.
Yeah.
It is. It's always difficult non-farm as well. I mean, before you might be tempted to sort of put trader break triggers on. So in other words, you're sort of looking to place stop trades. So if it goes through certain levels, it's going to trigger your short or trigger your long. And like we're saying, you get triggered short in that, and then it's come all the way back up, and you could potentially get stopped out, and then it will go in the other direction. So it is difficult.
Like it, doesn't it?
Yeah. And obviously on a lot of platforms as well, and I'm not going to name names, but I mean, one time on a certain platform that I was using, I had a decent dollar yen position on before the figures and had to stop 50 points, 50 points away from the market, and got stopped as the figure came out because the spread went 50 points wide.
Yeah. Be careful of that.
We all remember who that was.
We know who that was, Ian. Yes. Don't worry, we'll get them for you, mate.
Yeah, exactly. So and the market never went there, basically. That's what I'm trying to say.
Okay. Dollar index making a new high there on the day. Gold choppy, very choppy indeed.
Gold the spread in gold is three or four ticks on Saxo platform at the moment.
And Dow Jones still deciding what to do.
Oil's had a nice move to the upside, taking out the spike high yesterday. Oil seems to have settled.
What's that number that's just come out there? Change.
They changed their mind.
Payrolls.
They changed their mind, have they?
Oh, but interesting.
Just coming up to a fib in the dollar index. 101 is a 161.8% fib.
101.
101.
Interesting, because I really sort of thought, if we get like a half sort of a decent number, would give us an opportunity to sell the stocks, which I really fancy doing. But they steadied. They haven't really. There's not really much change from before the figure. So stocks seem a little bit skewed to the upside at the moment. Coming to the end of the week, we might get a little bit of book squaring, which might take it a little bit higher.
Yeah.
And we will open up on Sunday night, Monday morning, a lot lower. That's
quite possibly.
That's what I think, but I'm not going to trade it because it's the risk is too great. So, just have to wait to sort of let's see what happens next week.
The outcome overall in gold is little change from where it was prior to the non-farm, but obviously quite a bit of price action either side, which no doubt has taken out a few stop losses on both ends of that. We've got the biggest reaction probably coming from the Dow now, actually, which is heading strongly higher and on the move. Dollar index a little poke above a new high, but resting below that as we come to the close of that 5-minute bar, and some wild price action on dollar yen. So hopefully that was useful for people that have watched. I guess we can just wrap that up now. 5 minutes before, 5 minutes after, and might like to do that again next time.
One thing I will
Yeah.
just quickly say is on the dollar index, going back to, I talk about DMARC a lot. There's a lot of 13 counts up here.
Do you want to
So
show your screen quickly?
Yeah, can do. So 13 count on the 180, which is a 3-hour chart. The 13 count here on a 60-minute chart, shorter time frames. There was a 13 count there. It's just dropped off because the candles moved slightly lower. So even the shorter time frames and longer time frames are all showing 13 counts, which is normally exhaustion levels. So me personally, I wouldn't be buying dollars.
I don't know. I'm sort of like a little bit. Let's see. I think we've still got a long way to play out this, and I think dollar's going to be the safe haven that everyone keeps going to. I know it'll have its drawbacks, but it's still. I think it's got higher to go before we're out of trouble.
Indeed. Well, we shall all see in good time. Okay, let's wrap it up for the week there then, guys. Have a good one, and we'll catch you all on Monday.
Toodaloo.